And of course, let's get back to what I was saying. So when you think of a retirement account, let's talk about an IRA, for example. A lot of listeners have a retirement account, let's say a traditional IRA. And when you think of investing into a traditional IRA, a lot of people think, well, I go into my local bank, I buy a CD in my traditional IRA account. Maybe there's a particular term, there's a set interest rate, and then when it matures, you roll it over to the next term, whatever the next interest rate is, the next term is, or they have a traditional IRA brokerage account, and they have the ability to buy different stocks, bonds, mutual funds, whatever it may be. And we've spoken about this many times on the show. Zach, I was listening to a financial show on one of the financial channels.
Very nice.
And there was an individual talking about investing in real estate. I'm talking about physical real estate. Shake it, go up to it, knock on the door, say, hi, how are you? Physical real estate in an IRA, in a traditional IRA. Now, I'm not talking about somebody's primary residence. The example that was utilized was, say, a rental property. And there are many different advantages to doing so. And you could dedicate a whole show in that direction. And it's funny, I go off in this direction and I'm saying to myself, you know what, I should have brought on like a CPA to maybe have this conversation. But, you know, I'll do my best to, go. Zach, we forgot to turn off the phones. Well, all right, let me just pick this up. Hello, Lighter Side of Finance. This is David Crossan.
Chris Whalen, CPA, calling for David, please.
You know, it's so amazing how he would call today of all days, and he's a CPA. Chris Whalen has been on the show a good amount of times and has been so helpful to us. Chris, welcome to the show.
Thank you, David. Good morning.
Good morning to you. Well, you know what? Now that we have you, I have a lot of questions, but one thing that we were talking about just before I picked up your call, and thank you so much for calling in, is self-directed IRAs. And I think a lot of people think of them as some limited options. Maybe they buy a bank CD, maybe they just buy some investments. But we were talking about the opportunity to possibly buy real estate. Can you talk about that a little bit?
Sure. Most IRAs are limiting. People don't realize that. Imagine you had the ability to invest in other things, more diverse things, such as real estate, and shelter it in a retirement plan, as opposed to owning it outright personally. There are a lot of tax advantages. People don't realize they can do that. They can take some of their IRA money that they have, they can move it to a self-directed type plan, and then they can be opened up to real estate, to commodities, currencies, and other diverse investments.
See, that is so interesting because I think people think of a retirement account. Let's say they start off with a 401k or 403b, and they're thinking to themselves, well, let me roll over, and let's say they've retired, and let me roll over these monies to a traditional IRA and open the door, if you will, to more options. But I think a lot of people think of more options as either bank-related or, say, stocks, bonds, mutual funds. But real estate, I mean, if you think about it, physical real estate, gold, silver, physical, I can touch it, if you will, assets, is really opening the doors and options to a lot of people.
Right, and it's important. Number one, you would still need those to be overseen by someone like yourself. You still want your investment advisor heavily involved. But this really diversifies you. I know people are in the markets and they believe they're diversified, and a lot of great investment advisors such as yourself, who I work with, really do a good job at that. But to truly be diverse, I'd like to suggest that some of your assets are outside of the markets to truly be diverse.
I like that, and that makes a lot of sense, and we talk about it all the time when it comes to investments, is to make sure you're properly diversified, not to be in one particular area. With the stock market, it's doing well, but that you have to be spread out so that, at times when there's a correction and different areas may outperform, that you're properly spread out in different areas. And it's just funny because I was watching a financial show and they were talking about investing in real estate in a traditional IRA account. And Kristen, you and I got into the conversation, a previous time. And, I think that's very interesting. And that's one thing that you've been helping your clients with, to show them the different options and to be able to help them with these different types of available things that they can invest in.
Definitely.
Well, here is the big question. Zach and I are looking at each other and we're thinking, okay, tax season has passed. And I understand that after tax season, what do most of us do? We all take a breath and we're like, we'll deal with it later down the year. Make sure that we need to take any activity before the end of the year. And then we think, well, what do the CPAs do? Do they run off to Florida, hang out by the pool, and then wait for us to call them, come next April 15th? Let us know what you're up to, and let us know what we should be looking to do between right now and when it's time to get everything ready for tax season next year.
First of all, we're very busy all year. I have a very family-oriented and business-oriented firm. So we do all types of planning now starting April 16th, investment planning, business planning, college financing type planning. We do a lot of work with nonprofits, and a lot of them are not calendar years. So most individuals, we all are calendar year. We all think of taxes being done in December, but a lot of business clients and other type of entities aren't a calendar year. And so I have some March year ends and June year ends. So right now I'm in a very busy time as a lot of my nonprofits have a June 30th year end. So that's I call it summer tax season on June 30th. Also, we do a lot of work with financial advisors, as you know, such as yourself, to really start to plan for the year end, especially with a lot of changes that might come down the line with Trump, et cetera. But now is the time to be planning. One thing I want to interject that I want everyone to know when it comes to charities, please start to give money sooner rather than later. They're very poor this time of year. A lot of charities get money after Thanksgiving, and in the springtime they really need it. So if you're going to be giving to charity, I suggest that you do it now. You'll still get the same deduction, but it really helps the charities out.
I'm glad you're bringing it up because I'm thinking about a lot of individuals who do want to get in go to a charity or make a donation to a charity. And what do people do? Near the end of the year, they quickly race to make sure it gets done so that they have that deduction for their taxes. But that's an excellent point. This is probably the time of the year where they could use it the most, where, it's kind of lean at this time because people aren't thinking about making those contributions to a charity.
Definitely. And if you think about it, they need the money now because they do marketing, right? So they need the money now to be able to shore up their marketing to get donors in the wintertime. So a lot of my nonprofits I deal with, they are local, some are regional and national even. I know because I do the books for them. This time of year, the cash is very, very low, and they're almost on a skeleton crew. So I urge people to give now instead of later.
See, this is important because I think a lot of people, once they file their taxes, they take a deep breath and they're like, you know what, I'll deal with the different items near the end of the year, or I'll make sure I'll get everything done. And you had brought up a point in a conversation we had about Social Security adjusted due to one-time increased income. Can we talk about that?
Sure. So let me just what happens with Social Security, depending on how old you are, two things could happen. Let's say you have a lump sum of IRA distributions in 1 year. So that's going to skew your income average. And so sometimes seniors are getting Medicare Part B. They're getting supplemented payments, so they're not paying 100%. Or they're under a certain age, they're getting a certain benefit. But sometimes when you have this increased amount in 1 year in terms of a distribution or income, they may take away the Medicare Part B benefit that they're paying for you, meaning your portion, your share of the insurance will go up. They may reduce your Social Security benefit or have you pay something back. So it's very important to watch the mail, and if you have any odd transaction or something that's out of the norm, make sure you check with your tax advisor to see if it's going to impact anything related to your Social Security benefit.
That is so important. And, this is obviously a topic that our listeners are really getting something out of. And in fact, we have Jean from Toms River who has called into the show. And Chris, she'd love to ask you a question. How does that sound?
Sure.
Jean,
good morning. Good morning, gentlemen. How are you?
How are you?
Very good, thank you. I have a question for your guest. I was reading that for next year or this year, I'm not sure. the legislation creates an income tax exemption for veterans who are honorably discharged from active service in the military or National Guard. Can you tell me how that's going to work?
Okay. Well, from what I've heard is that there's going to be a if it passes, which we're not sure it's going to pass, it should actually affect 500,000 veterans that are in New Jersey. It should be a $3,000 tax exemption for you, for anybody who served in the military. That's what they're saying right now.
Okay. It wasn't passed with that gasoline tax, increase in the gasoline tax. I thought that was part of the.
I'll take your name and number, have it after the show, and I'll definitely get back to you. I'm not sure if it definitely passed 100%.
Okay. You know what? That's a great point because I don't think it was clear on how it was put out. But, Gene, thank you so much for calling. We'll absolutely follow up just to give you the proper clarity.
Thank you very much, fellas.
And don't forget that it should be, of course, it's honorably discharged and they've had active duty. So those are the two parameters there to get that exemption.
Gene, if you'd be kind enough to give Zach your phone number, and we'll make sure to follow up just to give you any additional clarity on that. And thank you so much for calling into the show. Okay, excellent. You know what? See, you're popular, Chris. People want to talk to you. And you know what? It's really great that we're having this conversation because different things that are coming up, being that's after tax season, you know, it's good to have this conversation so people properly plan and prepare so that come time for tax filing, they've taken the necessary steps. Now, one thing that I always ask people is, you know, what if you get a big refund? You know, some people look at that as a forced savings, or is it better, you know, maybe to owe money so you're not putting the money out? What are your thoughts on that and how to handle whether you're getting a big refund or you're paying back come tax filing?
Well, if you're getting a refund, too large of a refund, I believe it's incorrect. I don't want the IRS having all of that money all year. I'd rather be putting it to work for you with investments through David Crossan, for example.
Oh, I like that.
If year after year you're having a refund that's very large, it's very poor tax planning. I really suggest you move to a different tax advisor. And also, if you owe money consistently, you might be putting yourself in a penalty situation. People don't realize that if you have taxes that are due consistently, you really need to pay estimated taxes quarterly. And if not, you can get late payment penalties. So I urge everyone, if they have a very large refund each year, if they owe money every year, it seems to be too exorbitant, to please reach out to me so we can really fine-tune your situation because my firm goes well beyond tax preparation. We're really part of your financial planning team. I often say that the best financial planning has to start with the best tax planning. If you're getting a large refund every year, you are not financially planning correctly. You're not taking your assets and using them as wisely as possible for the future. So I urge all your listeners, as I have been doing since I've been on your show, to reach out to me via my website, call me, just as Gene just did, call in, and I will definitely have a consultation with them to really analyze what's happening with their taxes and to get them on the straight and narrow, if you will.
Chris, before we continue, can you give everybody your contact information?
Sure. I'm Chris Whalen, CPA, of course. My phone number is 732-673-0510. My website is chriswhalencpa.com, and I'll spell it for you. It's CHRISWHALEN CPA at CPA.com.
Well, we're approaching the summer. The weather's getting a little bit better, but here's my question for you, Chris. For working parents out there that have children, are there certain deductions or write-offs that they should consider that maybe they're not thinking of that would be appropriate to write off?
Well, the one main one is our day camps, and there are many different forms of day camp, if you will. So this is something that parents who are both working can get a child care deduction. A lot of them know that for after-school care, daycare during the day for very young children. But day camps and things that can be qualified as day camps are things that are deductible, and a lot of parents miss it. So that's a big reminder now to be saving those receipts for tax time, especially for day camp.
Well, if we're talking about that, that's a great point, and especially since we're doing the right thing now. We're getting ourselves organized for this particular tax season. How about for individuals that have medical expenses, out-of-pocket medical expenses, keeping track of them and, what they should do going forward. Can we go over some of them that may be a surprise to some individuals that, yes, indeed, that is an expense that they should keep track of as a possible deduction?
Sure. There are so many things, and I get this question a lot. And I have a very good memo on my website, actually, just related to this, which I would gladly forward to any of your listeners. For example, there could be, if you need a mattress, for example, that might be a medical condition that's causing that. I would get a note from your doctor. A mattress is a very expensive expense, and it can be something that's tax deductible if it's bought for a medical purpose. A lot of us need a bed for certain ailments, if you will. There can be a deduction for cosmetic surgery if it's for a deformity or a physical defect of some kind, or to help you with a disease you have, or for breathing. Drug addiction treatment, elastic hosiery for blood circulation problems. A lot of people, as they get older, have circulation issues, and they're buying different garments that are meant to help their circulation. That's something that could be deductible for them. An exercise program for a specific condition. What if you go to a doctor and he gives you an exercise program, or you're going to join a gym, or you need a personal trainer? That might be deductible under the right conditions, and those are very expensive. The list really goes on. That 99% of things that I have on my list here that are deductible, most people don't know they can deduct.
Here's one that, of course, I've got the cheat sheet. It's easy for me to ask you this question, but here's one that I wanted to ask you about: lead-based paint removal.
Right.
Now, that's one where if it's harming the individuals in the home, maybe there's a medical condition that if the people say bought a home or have been in a home that it turns out they have lead-based paint, there's the possibility that this could be a deduction for those reasons.
Exactly. Let's say you're in a home and you've been there many years, and you get your child tested and they have an elevated level of lead in their blood. Well, of course, that would mean an immediate action of needing to remove that paint from the home. And so that becomes a medical issue, doesn't it? So it's very important, if your child ever gets tested or you get tested for content of lead in your blood and it's higher than average, and that brings you to the point of needing to repaint, you might be able to take it as a full tax deduction.
Chris, that's fantastic. And again, do me a favor and the listeners a favor, because I am spoiled. I get your memos on a regular basis. Give everybody, again, your contact information. And if people want to take advantage of these excellent memos that you send out, excellent updates, how they can do so.
Well, first of all, send me an email to chriswhalencpa@gmail.com. Of course, CHRISWHALEN. CPA@gmail.com, and simply ask to get on my memos list, my distribution list. Of course, you can call me anytime, 732-673-0510. And, of course, the website, chriswhalencpa.com. You can contact me directly there, and, that comes right into my email as well.
Chris, I want to thank you again for calling into the show. A lot of useful information. One in particular I have to bring up again, when you mentioned about charities and people usually waiting to the end of the year to make those contributions to the charity of their choice. This is the time where these charities really need the money. So if you're going to give a contribution, you're going to donate money to a charity, rather than waiting to the end of the year, consider doing it now. Chris, thank you so much again. Chris Whalen, CPA, thank you so much for being on the show today.
Thank you, David.
Is that the band? They're coming in? Zach.
That's
great
it, David.
Show. Really quickly, let me pop it out there. My phone number, 732-730-2050, or go on to my website, www.davidcrossan.wfadv.com. Go on there for different articles and videos on investments and estate planning strategies. Have an amazing week, and let's talk next time.
The Lighter Side of Finance is a paid program. The views and opinions expressed in this program do not necessarily represent the views and opinions of the staff and management of this radio station or Town Square Media, LLC. The purpose of the program is to provide information only. Any financial transaction can only be recommended by a knowledgeable professional who is familiar with your financial situation. Wells Fargo Advisors, LLC is a registered broker-dealer and a separate non-bank affiliate of Wells Fargo and Company.